Started here. Thanks, Leslie. I think we're at 9:34. We've got at least majority of folks on. Well, welcome. We're at session 5. Oh my gosh, we were just talking about how quickly this class is going. We'll have this session the next week and then we're done. We're done with the session, but we're not done with your continued learning and practicing of all the wonderful tools that you've gathered through this class, right? Right. All right, so I think we are starting off with Dr. Palmer. I think you were going to do a quick review of SMART goals from last week or introduce the concept, and then I'll take over from you.
All right. Good morning, everyone. Hope everyone's doing great. I've only had one of my 2 cups of coffee so far. So when we take that first break, I'll be headed towards the second cup. I'm looking here. I'm down to just a corner in my cup. Hope you all had a great weekend and you're off to a wonderful, great, productive week. And just as a little bit of a review and reflection of session 4, which was we focused on strategic planning last week. We did quite a bit of work working together and independently, developing goals and action steps and outcomes. So we spent some time doing that work. One of the areas in your handout, if you go with me to page, this is the strategic planning topic. Go to page 87. And on page 87 in your workbooks is where you'll see kind of the singular page that outlines the work that we did. And as we mentioned last week, as far as strategic planning goes, the heart of the matter is that we write goals and we determine what we want to focus on in terms of our work for our organizations, what do we want to do in the future. And so typically the strategic plan lays that out. And all strategic plans have some way of indicating what we want to do or work towards, how we want to get there, and why it's important. So that then is our goals, action steps, and outcomes. One of the things that's important about writing goals is that our goals are SMART goals. And so we have some additional information for you related to that in terms of adding smarter as a way of framing how to write and craft goals and writing SMART goals. And so in terms of what we mean by that, again, we do have this laid out for you on page 87. We do want to be very clear and specific about the outcomes that we want to achieve. We want those outcomes and goals to be measurable, so we want to be able to quantify or qualify them. And so we track the progress of goal achievement or towards goal achievement. We want our goals to be achievable, realistic, and attainable. Relevant, which means that our goals are aligned with our broader objectives in terms of what we're focusing on in our agencies. It's typically important to have a specific time frame noted in the goals. And then when we move from SMART to smarter, we're ensuring that there's a way to assess our progress. And also keeping in mind, we should be able to make adjustments as we're moving towards achieving our goals. And then the R is an indication of revisions potentially to our goals as we're trying to implement the plan. So smarter goals, smart and smarter goals is kind of what we mean there.
Um,
Um, Also, in terms of thinking about SMARTY goals, we include elements of inclusivity and equity. And so here we're just wanting to ensure that there are diverse perspectives as a part of crafting our goals and mapping out what it is that we want to do in our strategic plans. And so smart, smarter, smarty. We've added some additional information there for you. Um, Rebecca's also going to
Mm,
spend some time
no,
talking to us
no.
about specifically smarter goals. Or Lisa, sorry, is going to spend some time talking about those. But before we do that, can we just go in the gallery real quick, team? And we'll come back to the smarty goals. I just want to lay eyes on everybody. We just started this morning, just jumped right into the work. So just want to say hello and good morning for those of you who we didn't have a chance to do that with yet. Um, Give me an idea in the chat how you're feeling this morning. Use the React feature, or you can type it in the chat. Um, I am a morning person. Yes, I think I shared that 5 weeks ago, 5 weeks ago now, 4 weeks ago. So for those of you who it takes a minute to kind of get you going, um, thank you for allowing me to be me. I see all kinds of reactions here, team. I see a snowman. Who's this snowman? Talk to me about that.
I'm freezing cold.
Oh, you're
I've got my space heater, my coffee, my fleece, my door shut, and I'm still.
okay. Okay, all right, okay. And I think I saw a reference to Halloween maybe kind of floating there. So for those of you who are cold, have you turned the heat on yet? Yes. Okay. Just taking a minute to get to get it all warmed up. Well, good morning. Good morning. Again, my grandmother used to say, come and see me so I can lay eyes on you. So I just wanted to uh, just kind of float through here and see who I can see. And again, I hope you're off to a great start this week. As we mentioned to you each week, we're so glad that you decided to choose the Nonprofit Management Institute as a resource for your professional development. And so good morning and welcome. I'm going to hand it over to Lisa, I do believe, and
Mhm.
she's going to continue to share in our moment of review and reflection of our topic last week, which was strategic planning.
Right. Thank you, Dr. Palmer. So, not to labor on this too long about SMART goals, but there's just a couple of things. When Dr. Palmer told you to look in your book of 87, page 87, just remember from 87 to 88, 89, and 90 shows the evolution of a goal statement and how you should make sure you're including the action steps and the outcome. We've always gotten the question, well, outcomes are just difficult. How do I understand? And the way I find it's easy for me, what will change by the time I've implemented my program? That's the outcome that I want. What's going to change? What's going to be the difference in terms of what I stated in the beginning, right? So if in the beginning, if I said I want to find affordable housing for X amount of people, but the outcome is the outcome will be I have found, or find not I have found, but we have found 80% of affordable housing for homeless people. That's what changed for me. So just remember you have that outcome statement in the end. Now, smart T goals have evolved to include inclusivity and being equitable in your goal. Now, I know right now in our times, those are touchy words right now. One of the things I would like to bring to class next week, I was in a session, a policy conversation in Wilson last week, and one of the things that our policy vice president brought to our attention were a list of words that you should not use either in whether it's in presentations or in your RFP grant proposals in response. And I thought it was very helpful because I hadn't seen some of these words, but the odd thing about it, in the RFP, as some of you may know, may use some of those words that they're saying you shouldn't use in your response. But and he gave us really good advice in terms of if you're looking for grants and you're researching them, make sure you contact the grant administrator, the people who are giving the grant, to ask them if you're using this word in the RFP or these words, will I, what is the, I don't want to say penalized, but what is there a consequence or something, or am I judged rated lower in my application if I'm using these words in my response? It's always good to ask and not assume. But meant to have it for this class, but he left before I got a chance to get it. But I'll make sure I bring it to the next class, so that way you can all see these words that they're suggesting. This is from the federal government, that you should not be using in RFPs or proposals. So if you can go to slide, I'm sorry, go to slide 8. Um, so here, as Dr. Palmer already went through, the specific, measurable, attainable, relevant, and time-bound goals already. The inclusiveness. So this goal invites traditionally excluded individuals to make decisions and contribute in a way that shares power. For that one, being equitable. Does this goal include an element of fairness or justice that seeks to address systematic injustice, inequity, or oppression? Now, again, if you choose to still have these elements in your programming, again, everything, I know words just have to be chosen carefully during this day and time, so we understand that. Um, so those are two areas again that were added. So if you remember the last class, I think we ended it with you writing a goal statement, and hopefully you can put your hands on that goal statement that we did during strategic planning. And, and just wanted you to do a quick exercise with that goal. Um, if you can just take a minute to find it, and I'll give you a few minutes to do that. Um, what I want to ask you to do is if you can take that goal and rewrite that goal from last week, adding smarter or smarty elements, and share back a few with the group if you can. There's a couple of volunteers. So we're going to give you a few minutes. Find the goal. Hopefully you can find where you had it in your book or a piece of paper, and just rewrite it to include the smarter or the smarty elements. As we've just explained, as you can see on the board, that there's two examples there using a youth mentorship, so you can get an idea of what we're talking about, and you can read that. I don't need to read it to you. You can see it there. Any questions about that? I'll give you about, I don't know, 5 minutes. Good, Rebecca. Is that too long?
Yeah, let's do 3.
Okay, you got 3.
Let's get them moving. We'll be quiet while you work. 3 minutes.
All right, I think we're at what, minute 2, possibly? 47, 48. And then whether you're finished or not, it's fine. It's just that we have a lot to cover today. We just want to make sure we hone in on this point of the Smarty goal. Can maybe we get 1 or 2 um, examples of someone maybe who's finished? Just to run it by the group.
This is Carlita. I'm
Great.
happy to do.
Thank you.
Um, so my SMART goal was secure 5 grassroots partnerships for arts programs and pilot a youth engagement program by fiscal year 2027. And my SMARTY goal is secure 5 grassroots partnerships for arts programs and pilot a youth engagement program by fiscal year 2027 that represent our community by age, with age, gender, and race according to their characteristics.
Okay, good. Rebecca, give me some high fives. Anyone else? Maybe one more? One more brave soul? Okay, it's fine. But see, I think you all get the gist of of how to do it and how to add on. Again, if that's a goal of your organization now, right? To add the smart T aspect to your goals, then you should. Let's roll on to our agenda today because we have a really packed agenda as normal and usual. We just went through our review and reflection of session 4 for a short period of time. And today, like Dr. Palmer mentioned last week, we have 2 sessions within one, financial management and fundraising. And as you can see under financial management, again, this is a high level view because there's a lot of details you can go into financial management and fundraising, but we've tried to pick the most important highlighting factors to go through. But if you have questions, please make sure that you ask the questions and we can make sure they get answered. So Dr. Palmer, would you like to go through any more of the agenda details before we move
Sure.
on? Mhm.
Sure. Thank you so much. Again, our 2 topics today is financial management and fundraising. The cadence for today is, as usual, we pretty much have I'll just call it a robust cadence, where we move through our material. There will be more hands-on work during the fundraising portion of our time today. Again, we have a 2-part session, financial management first, and we have a guest with us that is going to be working with us today. And then the second part is the fundraising. There will be times where we will put electronic documents, or we will reference electronic documents, and we'll put those links in the chat. And so be kind of paying attention to that. There is some information that is not in your workbook. As you know, we've done that in the past with the sessions. So just kind of recognize that we'll be using that feature as a part of the Zoom platform to share information in the chat. Of course, there'll be an evaluation as usual, and the team will prep us for graduation next week. Can you believe it? We're already at graduation time, but the team will prep us for graduation at the end of our session today. Keep in mind that well, some people are ready to graduate. I see some reactions there. But we will also have a few minutes after the session is over for our office hour. So keep that in mind. And as Lisa mentioned, we focus on the fundamentals as it relates to well, all of our topics. So today we will do the same. So recognize that each of these topics could be a full day, a full week for that matter. And so just kind of recognize we've identified some real salient kind of areas of each of these topics, and that is what we will be presenting today. Financial management will focus on financial transactions, internal controls and audit, and diversification of revenue. For fundraising, we will focus on the stages of fundraising. We'll cover another fundamental concept, which is the giving pyramid. We'll work on that. We'll do quite a bit of hands-on work or activity work related to prospecting and developing a list of prospects to approach to raise funds. And so looking forward to our work today. And I'm going to hand it over to, I do believe, or am I still up? Am I still up? I just keep going. Okay. Let's go to the next slide. Thank you. So we're gonna go into breakout rooms here in a minute, and we want you to take some time to a couple minutes to study this pie chart. And as you're studying this pie chart, we want you to think about how you would answer this question. How does the pie chart represent diversified revenue coming into a nonprofit organization? So how does this pie chart, the way that it is defined in terms of revenue, how does this pie chart represent a nonprofit organization that is experiencing diversified revenue or a diversified revenue stream? So I want to give you a couple of minutes to just kind of study this. And then we're going to go into breakout rooms to spend a little bit more time on this. So just take a couple minutes. And it might even be a good idea to, if you got your phone handy, just take a quick picture of the pie chart. Rebecca also put in the chat a link to this image. It comes out of a past impact report of a nonprofit organization located in our state. And so, how does this pie chart represent a nonprofit with a diversified revenue stream? So take some notes. We're going to place you into breakouts, and we also want to utilize this time to continue to make introductions. And so when you go into the breakout, introduce yourselves and then share with the group how this image represents a nonprofit with a no, didn't mean to say fried, diversified revenue stream. Uh, and if we could go back to the gallery now and then I think Rebecca's going to place us in our breakout rooms.
Yep. All right. I'm gonna actually only give y'all 8 minutes, taking 2 away to make sure we stay on time.
Okay.
I think you all can cover it. So we've got you in groups of about 5 or 6 folks. Reminder, introduce yourself. I'll put the instructions in the broadcast chat to the breakout rooms, including this link. But we'll see y'all back here in a few.
We want to have some discussion around this particular image. We kick off financial management with a conversation around diversifying our revenue. Because as we look at financial management and we learn more about both financial management and fundraising, one of the North Stars for our organizations should be to diversify our revenue stream. While that can be challenging to do, it is a goal that we should work towards as our nonprofit organizations grow and develop. And so we want to hear a little bit about what you saw or what you see when you look at this image. And we can start with any group. Rebecca, how many groups did we have?
Looks like we had 7.
7. Okay, great. So if we could hear from maybe about 2 or 3 groups, what did you see when you as you were studying this image? What did you see? And team, can we pull up slide 12? I just want to kind of show the pie chart while we're having this discussion, and then we'll come back to the gallery. Thank you. All right. Is there a group or a person that's a part of a group that would like to share what you all discussed?
Hi, I'm Mary from Downey's Partnership for Children. So I was in team one. We had a very rich conversation about the diversity of the funding sources in this pie chart. But then we took it a step further because there were people in there that may have a singleton funder. And I didn't realize that being in nonprofits for a year and a half, I didn't realize that not everybody looked like this, which looks like us. And I was thinking, okay, the world, all operates with these very funding sources. One thing that was interesting, Christian and I were talking right at the end of our discussion because we went into what's going on in the world around us with funding limitations and things being cut. I mean, we lost our SNAP Ed funding and it's been reduced by, I don't know, 70%. And she said, we were talking at the end of that, and Christian was sharing that we've been in this place before, and that I wanted to hear that because my executive director has been in place for over 30 years, and she, was the founder of this partnership. We serve two counties. And so with that being said, I was thinking, have we been at this level of concern? And so while this funding source is very diverse in this pie chart and it emulates ours, but what's scary is when you lose large chunks of money, then, you may be in a different situation. Another thing that Leslie brought up was those pie charts that are, one source that may be private. There's some new stipulation with the government coming down, and I'm like, oh my goodness, I did not know that. They call it flipping. So Leslie might want to speak to that more, but I thought we had a really rich conversation.
Thank you, Mary. Thank you so much. And one of the things I do want to hear about flipping, so I don't know who that was. If you could kind of get ready to share, if you're open to doing that. I do want to hear some commentation around that. Um, but yes, when you look at this pie chart, it has diverse um, um, ways in which dollars are coming into this organization. And it's about 8 different ways. This is kind of how I see it. So we've got 8 different kind of ways that dollars are coming in. Did that person want to speak to flipping before we go to the next person that might want to share?
I can, yeah. Uh,
Mhm.
we just found out. So we have one large private funder, and we've been open for 3 years now. And coming up on that 5 year mark, I was hired to diversify our funding because coming up on that 5 year mark is when the federal government will flip your 501(c)(3) to a private foundation and then have you pay for all of the taxes that you were exempt in those years. So that's what I'm working on with diversifying our funding.
Oh, so this is in regards to shifting from a 501(c)(3) designation to is it still going to be a 501(c)(3) or is it
It
going to
will
be?
be, I think, a
Mm-hmm.
certain percentage of our other
Uh-huh.
funders. It has to be a certain percent of what our main
Uh-huh.
is giving us.
Uh-huh.
Um, so yeah, and then the federal government just will automatically flip you, from my
So
understanding.
the Right. And so keep in mind, I don't know how many of you are aware, if you look at the 1023 internal revenue application for tax exemption, when you fill out that application, you have to indicate it's about 10 or 12 different kind of ways of considering your 501(c)(3), and you have to check off and choose one of those. What Leslie is talking about is at the inception of their nonprofit, if they indicated that they were a 501(c)(3), it was probably a or H. There are letters that you have to choose. Now what she's saying is that they're transitioning and they're going to become a private foundation. And so I just want everybody to understand and be clear that this may not be relevant to your organization if that's not, in fact, kind of what it is that you're doing. So just want to bring some clarity to that. And thank you for sharing that. It's always good for us to add more knowledge about these things as we're trying to pay attention to our funding and where it comes from, and how the Internal Revenue views that. Anybody else? Let's hear one more. One more.
We had a good discussion as well. I'm Jacqueline Stringfellow. I'm with the North Carolina A&T Real Estate Foundation. And of course, we hone in on the fact that they did have a very robust diversity of funding sources, and also spoke about leveraging some of the other funding sources if there are deficiencies in other areas, such as if private funding or foundational grants by way of private foundations or the United Way begin to go down. And even in light of the climate that we're in right now, when we look at their 8% government funding, if that has the potential to go down, they can leverage their funding sources from their special events or memberships, and then also their program services as well. And then I also just, excuse me, my voice got a little dry.
That's
Also,
okay.
also honed it on the fact that I mean, looking at this, this basically can really tie into their strategic planning, and even looking at some contingency planning in lieu of the current climate and the potential loss of government funding, and any decrease in funding of their foundational grants or United Way grants.
Thank you.
Mhm.
And thank you for pointing us in the direction of really looking at the fact that we don't want more than a third of our revenue coming from one source. Because if that source leaves us, then, it could leave us in a dire situation. And so we want to diversify our revenue. I do want you to take some notes as I kind of give you some ways of interpreting that you could have interpreted this pie chart. So I want to start off with first, there are 8 different means in which dollars are coming in, right? There are 8 different means in which dollars are coming in. We can see that. However, there's only 3 revenue streams. One is grants, and under grants would be government, foundations, United Way, and probably corporations. That's probably where the grants are. The second revenue stream is earned revenue, which is the membership fees and the special events. The third revenue stream is the donor giving, which is the individual giving that you see. I can't really tell from this without the narrative to go along with it in the moment, but program could be grants or fee for service. Don't know which one it is there. If it's fee for service, that's the preferred, because then those dollars coming in could be considered unrestricted, and that means you have more flexibility there. If it's fee for service, also it would go under that category of earned revenue. And so then again, there are 3 revenue streams, I'll just say not to be fooled by the fact that there are 8 means, there are 8 mechanisms in which those dollars are coming in, but there are 3 sources. Grants, earned revenue, and donor giving is primarily where these dollars are coming from. So if you're looking at it from the perspective of not wanting more than a third of our dollars coming from one source, then you might group those together, kind of see where your percentages falls across those 3 sources and begin to do your planning as a result of that. One of the goals could be here to increase that individual giving. Looks like there's good momentum there. 16% of the dollars that year came from individual giving, so there's some traction there. So that's good. It might even be special events. There's an awareness that the organization is doing special events. So that could be another way of bringing in those unrestricted dollars. And definitely, if there's an opportunity for fee for service, that's another way of looking at acquiring unrestricted dollars. And if you were in a strategic planning year, to Jacqueline's point, if you were in a strategic planning year, you could go ahead and bake into the plan a financial management or fundraising goal or some combination in terms of moving more towards more diversification. But this looks pretty good. I mean, this is kind of what we see. But again, we know that we want to try to get as many unrestricted dollars into the organization as possible. Team, if we could go back to the gallery, I just want to see if there are any initial reactions to the notes that I provided or the bullet points I just gave. Again, we can talk about financial management all day. We can talk about transactions, we can talk about budgets, we can talk about, which we are going to, we can do all of that, right? But we do need to have a working strategy. We need to have a working strategy. My perspective is that spending time studying your pie chart and strategizing how you're going to move towards whatever your goal is there is as important, if not more important, than understanding how to do a budget, because the budget reflects your plans. The budgeting reflects what it is you're trying to accomplish. And so again, yes, all of those things are important, and our special guest is going to help us to learn all about that. But it is just as important for our organizations to have this overarching, what is it that we're striving towards, and to what degree do we understand our own pie chart? Do we really understand our own pie chart? And if we do, how do we want to shift our financial position based on what it tells us in the moment, right? Shanice.
Yeah, thank you, Dr. Palmer. So I think I heard you say that a best practice is no more than 1/3. Is that
If
that's
possible.
if possible? Okay,
Mhm.
so that is kind of though the gold standard of, and of course, if it's even less is even better, but
Mhm.
1/3, which also implies there should be at least 3 sustainable revenue streams or
Mhm.
donor streams, dollar
Mhm.
streams. Okay,
Mhm.
thank you. Want to make sure I
And
heard that right.
and the icing on the cake of all that is we should be trying to generate and acquire as much as we can funding from individual giving, from donations, right? So that's the icing on the cake. Like that is where we spend more of our time writing grants than we do raising individual donations, typically.
And is that not, you're saying you would rather it be the swap of that? Is that what you're saying?
I'm not saying I would rather it be, but what I will say is that you'll have more unrestricted dollars if you do it that way.
Yep. Okay, got it. So percentage of restricted versus unrestricted, ideally 100%, obviously, but is there any best practice or benchmark that says shoot for X?
Well, what you said a second ago about the third rule, the
Yeah,
1/3
okay.
rule, that applies there too.
Okay, great. Thank you.
Mhm. Great, 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 great. And we do have a lot to cover. And so, but team, I do want us to, I want our cohort here to really, really understand that understanding your financial position is where you really should start. Before you start fundraising, before you start determining what kind of accounting system you're going to use and all those things, it's important for those organizations that already exist. What is your current financial position today? And how do you want to change it? How do you want to shift it? Because what we're going to train you on are the mechanics. It's the mechanics. It's not necessarily your strategy. So as you're going through this information today, think about how you want to change your pie chart. And then the financial management tasks that you have are so that you are compliant, so that you are, engaging in facilitating your transactions with integrity, and you're being a good steward and all those things. But in terms of getting you to your whatever your destination is that you choose, that's kind of where we're headed. So what we're going to do is we're going to take a stretch break. But before, no, we're going to take a stretch break. I think I was told 3 minutes. 5 minutes. It was 5. Now it's going to be 3. Anyway, so if you could take a Zoom 3-minute break as we transition into financial management, and then we're going to jump right into our work. Thank you for that discussion. Very important for us to go there before we go into our financial management work today. As we get ready to go into our financial management topic for today, I'm going to pass this over to Lisa. She's
Yeah,
going to introduce our guest. Then I'm going to move us into the content.
great. Thank you, Dr. Palmer. All
Mhm.
right. Um, so we're going to have a guest with us. Today is Tracy Carriette. Tracy's responsible for the overall financial operations of the center, as well as our audit and tax functions, budgeting, policy and procedures, and human resources. She wears that. She's a unicorn. She just wears the hat of all. She began working at the center as an intern while attending Meredith College, where she received a BA in mathematics with a minor in accounting. Tracy's certainly a veteran of the center, and she has more than 20 years of experience in nonprofit accounting, human resource management, and previously she worked as a staff accountant with a CPA firm specializing in nonprofit accounting and financial consulting. She's currently serving as the not-for-profit, on the not-for-profit committee of the North Carolina Association of CPAs. So always happy to have Tracy with us for our class. And welcome, Tracy. Where's your face? I don't see
Good
your face.
morning.
Oh, there you are. Okay. And I hand it back to you, Dr. Palmer.
All right, great. So if you look in your workbooks, you'll notice that you have less than a handful of handouts here. You have on page 102 is where I am. You have a budget worksheet, then you have a page on 103 that kind of lists what Tracy is going to be sharing with us today. Team, you can go to the next slide. But overall, we're going to look at 3 different aspects of financial management: financial transactions, internal controls and audit, and diversification of revenue, of which we have kind of already covered. We'll do a little, spend a little bit more time on that. But for the most part, we've covered that topic. The financial transactions is where we're going to spend the bulk of our time. And so I'm just going to say, fasten your seatbelts, because we've got quite a bit of information to work through. Also notice in the chat, there is a PDF. We'll be putting PDFs or links to PDFs in the chat. It's titled Financial Management Resources. And so that file has been shared with you. So I'm going to pause and give you just a couple seconds to make sure that you can access that. I would go ahead and kind of download that and save it as we're going to be working through our content. We are going to use the screen here. So we will be kind of walking you through the pertinent information as it relates to that. Financial transactions is the first topic that we're going to cover. You can go to the next slide. And so here are all the pieces to the puzzle. Guidelines, policies, duties and responsibilities as it relates to financial transactions, the revenue and expenses, budgeting, reports, and presentations. We're going to spend some detailed time on the 4 statements there that you see with the check marks statement of financial position, activities, cash flows, and statement of functional expenses. We're also going to highlight the what the 990 form is, the annual report, the document that we're actually going to be using to share with you today and to walk through the duties and responsibilities, in particular, the financial reports. We will actually be using a auditor's report. So just know that that is the tool that we're using. And then in your workbook on page 104, you will see the generally accepted accounting principles listed there. And so, team, if we could, also, there's a book that we're going to share with you in the wraparound. We'll come back to that. But know that there's also a resource that we're going to be sharing with you too, as an additional source. In terms of financial transactions related to guidelines, keep in mind that each organization will have your own set of guidelines and policies that you'll utilize as it relates to your financial transactions. Typically, that is with the person. Those guidelines and policies are with the individual who handles your bookkeeping or who handles your finances and so on. And so those policies and guidelines are typically determined by your individual nonprofit organizations. You can refer to your bylaws. Oftentimes in your bylaws, there's a section on how the board of directors handles your financial transactions. Typically in your bylaws, there's reference to maybe your checks and balances of the internal controls, some general practices that you may have. Those are typically found in your bylaws for your board members. But again, your bookkeeper or the individual that handles your financial transactions typically has, and your executive director, CEO would have and identify what those guidelines and what those policies are specifically. We're going to move into the financial transactions. The team is going to pull up a audit or auditor's report, and we're going to have Tracy begin talking with us about revenue and expenses. So all the items you see under financial transactions there, she is going to work with us today and share with us how we need to think about each of these. Tracy?
Should we jump into the statements or talk a little bit about budgeting first? Dr. Palmer, are we ready?
I would say you can start with revenue and expenses if you'd like, and then just move right through that list. Yep. If you want to.
Gotcha. Gotcha.
Mhm.
Yeah, so we've been talking already a lot about diversifying funding, and how that's the strategy that you need before you get into your budget. Your budget is going to be your main source of tracking revenue and expenses. And we're going to talk about these in detail when we start looking at some of the samples that we have. But you're going to want to be thinking about, again, before you even develop your budget, what types of revenue streams is your organization going to have, whether it be contributions or earned revenue like fees for services, and what sort of expenses that you will have. And these will be different for each organization. There are typical expenses that most groups will see related to, like, maybe your office space or your equipment, and things like that. And then you might have some also have some expenses that are unique just to your organization. I think that I'm going to really get into revenue and expense more on the budgeting and the sample statements. So if we want to move into sharing
some of the documents around
Okay.
budgeting that we have available, unless there's anything you want to add, Dr. Palmer.
No, we can go right to the financial transactions, the financial accountability link there. We can go ahead and pull that up. The other thing to keep in mind in your workbook, we do have a sample budget worksheet. And as Tracy is going over this audited report that has all of these documents or all of these reports in it, you'll start to see where the revenue and expenses and the budgeting comes into play.
Yeah.
And she'll kind of weave those in
Yeah.
to that.
And Dr. Palmer, before we pull up some of the statements out of this audited report, speaking of the templates and the sample budgets that are in the materials for folks, I do just also want to mention a couple of things about that process really quickly. Again, we've mentioned it. Your budget is based on your strategy, and it is just your plan for the year. It's your best estimate of what funds you think are going to come in, your revenue, and what expenses, what you think is going to be spent during the year. And as your organizations are preparing these, a good strategy for you all to think about is to get multiple staff involved. So this shouldn't just be developed by your finance folks or your executive director. You want to get your programs team, really all of your team involved in helping develop this budget. It really does help create buy-in and ownership of the organization's finances overall. And it'll also help you get a full picture of the organization's needs. So I really encourage you all to make this a group effort as you're planning your budget for the year. Let's see. Let me see what else I wanted to touch on. Are we going to share the sample center budget? Are we just going to dive right into the financials?
Let's dive right in.
Okay, yeah.
And then we'll circle back if we need to.
Sure, that makes sense. Okay, team, I think you can pull up our audited financials. Yeah. So, as Dr. Palmer said, this is actually an auditor's report for a sample nonprofit organization. These statements are open to the public on their website. So we just grabbed one as a sample to sort of walk through. So the first one we're going to start with is the statement of financial position, which you also may have it referred to as the balance sheet. So Leslie is just scrolling through this overall audit report right now, which will come with a table of contents and a letter like you're seeing here. Your auditors will issue an opinion, but now we're getting into the meat of the statement. So this is, as I said, the statement of financial position, also referred to as the balance sheet. What this statement is going to show is assets, which is what the organization owns, liabilities, which is what you owe to someone, and then your net assets or your equity. And these are ranged by typically by order of liquidity, so things that are liquid in the shortest amount of time, which would be like cash equivalents, that sort of thing. The statement of financial expense is a snapshot of the financial health of the organization. And so when we're looking at this with example of assets, so current assets are going to be things that are liquid within the next 12 months. So readily available for your organization. And some examples of these are cash, so that could be your bank accounts, grants receivable, which are grants that have been awarded or expected to your organization that maybe you haven't received yet at the time of this report. Prepaid expenses. So if any of your organizations offer health insurance to your employees, you know that you get an invoice for that a month in advance. of the month of coverage. So that's an example of a prepaid expense that your organization might have. Leslie, you can scroll to the second half of this, which is going to show liabilities. Um, so again, liabilities are things that your organization owes. So what you'll see here, some examples are accounts payable, lease obligations. So if you have a copier that you're leasing or office space that you pay rent on, those would be examples of lease obligations. Um, Deferred revenue, that is not to get in the weeds, that is just revenue that is collected for a service that's going to happen in the future. And so you've already collected it at the time of these statements, but the actual event or service that you're providing isn't happening until the future. So you would show that deferred revenue under a liability on your balance sheet. Current and long-term liabilities can be things like loans. So if you have any loans or credit cards that your organization might have, they would show in this section of the statement. And then the last part at the bottom is net assets. And so that's what would be left if you sold all your assets, everything you own, and paid off all your debts and liabilities. So net assets is your total assets minus your total liabilities. And you'll see here net assets are split into two different categories, without donor restriction and with donor restriction. So this goes back to when we were talking about diversified funding streams and general operating support. That is without donor restrictions, which means it can be used for anything versus a grant that may have been awarded or funding that you may have that is for a particular program or event would be with donor restrictions. So this report defines the net assets that you have available to conduct operations. So things that you want to pay attention to on the statement of financial position are receivables, so amounts of money that are outside your organization, and then the comparison of assets to liabilities and any big changes from year to year. So you can see this statement is showing what would be the current year, which is 2019, and then the previous year of 2018. And changes in net assets are gonna, whoops, sorry, I jumped ahead of myself. Leslie, you can scroll to the statement of activities. Yeah. So this one you might have heard referred to as the profit and loss or the income statement. So this is revenue and expense over time. So the purpose of this statement is to provide detailed information about your organization's transactions and how those activities are going to help further your mission through your different initiatives and programs. So, like I said, this shows revenue and expense over time. It's going to show you the cash coming in and the cash going out of the organization. You can see it's categorizing your revenue and expense by type or by program. These are going to tie both the revenue and expense. Well, the revenue in this case is going to tie back closely to your budget. So your budget will probably have line items for individual donations, corporations, foundations, government streams of revenue, right? So that's going to tie back to the statement of activities. That is going to also help you make sure that you're on track with your budget. So because this is an auditor's report, this is a statement that you'll get at the end of the year. But if you look at those sample budget documents that you have in your materials, you can see how you can be tracking your budget throughout the year that is going to lead you to a financial statement like we're looking at here. So on this statement, the expenses are tied to the budget, but here they're broken down by program or support area. So you can see this group's program services are just over 5 million, and then they've got their general and administrative and their fundraising and development expenses. And if you scroll down just a little bit on this statement, you can also see, well, this is the different columns are separating the revenue into with or without donor restrictions, just like we talked about on the balance sheet. So again, that restricted revenue has to be used for a specific purpose or program. And so by seeing them separated like this, you can see the flexibility in your funding. You can see what revenue has no restriction and what revenue has restrictions in place on it. And then down at the bottom, the changes in net assets are your expenses subtracted from your revenue. So basically, this is going to show you if you have enough revenue to cover your expenses for your fiscal year. And then we'll keep scrolling down to the statement of, yeah, we can stop here, the statement of functional expense. So many organizations have to do this statement of functional expense for their Form 990, which we're going to talk about in a minute. It's their tax return. So a lot of organizations will include this same statement in their audited financial report. So this particular statement is just showing a classification of your expenses by function. So again, you're seeing program services, and this can be more detailed, like you can split it out to show the individual programs that your organization has versus a total here. And then your support services, which are the general admin and the fundraising and development. So again, these are similar line items that are going to tie back to both your budget, your statement of activity. You can see all the different expenses that this particular organization had for the year and a comparison to the previous year. To talk a little bit more about program services are going to include expenses that you incurred to meet the mission of your organization, either through programs or services, and this can be directly or indirectly. There's a question about, does this form go by any other names? I think I've only heard it referred to as a functional expense. What about you, Dr. Palmer?
That's the only way I've heard it referred to. Now, the
Yeah.
previous statement is sometimes referred as the P&L, but not
Yeah.
this statement doesn't have a different name.
Yeah. So program services are directly tied to programs to meet your mission, where the support services, often referred to as operating expenses or overhead, and then you've got fundraising and development expenses. There are different ways, different methods to allocate expenses to these different service areas, whether it's supporting or program. And again, we could spend weeks going through all of these topics. So we're not going to get into this, but you just want to ensure that you have a methodology that is reasonable for your organization, as a way to separate some of these expenses into program area versus supporting services. I know we went quickly. Are there other questions about any of, oh wait, I think we have one more, the statement of cash flows. Sorry, it was out of order on my notes. My apologies. Yeah, so statement of cash flows. So this statement is going to provide data or information about the cash flows received from operations and investments. So it summarizes the movements of cash that come in and go out of the organization over the course of the year. So it's where the money comes from and how it's being spent. So again, just like on the other statements, you'll see year-over-year comparisons. Operating activities, which is this first section, is going to include cash from operating programs and services. And then it goes into investing activities, which is can be the purchase of sales of assets and any loans that were made or received. And then the bottom section, if you scroll down just a little bit on the screen, is financing activities, and that includes cash from financing, leases, credit cards, those sort of activities. And ultimately, what this statement is showing is the change in cash from one year to the next, just broken down in those sections that I went through. So now I think we've gone through the main statements of this audit report. I know that was quick. There was definitely a ton more information that we could share. I see Tiffany has her hand raised for a question.
Yes, hi. On the previous statement, there were a lot of things in there that I typically would, yeah, right there. So, eh, is this the last one? I saw postage and printing. Yeah, right there. So some of those things I would like have included together or grouped little bit more. So I guess my question is just, so is it possible that these are a little bit more broad? The categories here might be a little bit more broad and not broken down this to this extent, specifically for this report.
Yeah, I would say this can look different for every organization. So it might make sense to combine some of these individual line items into a category that's a little bit more broad, which I think
Yeah.
is what you're asking, Tiffany.
Yes.
So yes, it does not have to be um, um, this with this many detailed expense line items. I think that um, the way that you break it down in your budget would make sense for you to break it down here as well in terms of expense line items. So, for
Perfect.
example, if you have telecommunications, that might involve um, telephone, internet,
Yes.
that sort of thing that you might see all combined versus having it separate on here.
Okay, perfect.
So yes, I definitely think there's flexibility in how broad or specific you have the line items on this report for sure.
Another thought there too is your funder. So you might have a grant that actually pays for something specific. And so it may be easier for you to track it if you go ahead and have your finance person to separate it for you. So then when you're doing in your report back to your funder, you don't have to break it down at that every time and explain it. Sometimes that guides what line items you have. Sometimes your funders will give you a boilerplate or a template for your budget for that grant. And so it would make sense to me, Tracy, I don't know what your thoughts are, but it would make sense to me to make it easier on the reporting side if you already have those line items framed out,
Yeah,
as you go
absolutely.
along.
Thank you for that point. That makes good sense down the line. Thank you.
Yeah. Any other questions?
Okay.
I think the last thing I'll mention is again that these are sample statements from an audited report. You can get similar statements out of your accounting system. So a lot of nonprofits use QuickBooks, for example. You can get similar statements that are generated for you, and you should be looking at them on a regular basis and sharing those reports with your finance committee of your board, however frequently they meet, because that will help you again in tracking your budget and seeing if you're meeting goals or if you're a little behind or if your expenses are a little bit higher or a little bit less than maybe you originally planned. I think
So the next thing we'll move to is the 990. And so some of you may be familiar with this particular task that you're expected to perform each and every year, to report to the Internal Revenue your financial business, for the most part. And so I'm going to pass it right back to Tracy, and she's going to walk us through this.
Yeah, so again, just a really quick overview of the Form 990. So that is a nonprofit organization's tax document. It should be filed annually with the IRS. It's due the 15th day of the fifth month after the close of your fiscal year. So if your fiscal year goes from July to June 30, then your 990, your tax return document would be due November 15th. What you're seeing on the screen is a standard Form 990. Just like with our individual taxes, there is a 990 EZ, and there's also what they call a 990N, which is a postcard. And which form your organization completes depends on your gross receipts. So it can vary for each organization. We always like to lift up during the Institute that in 2019 there was a mandate for versions of the 990 to be required to be filed electronically. And it has to be done through an authorized IRS e-file provider. And so we just mentioned that because it can definitely be burdensome and challenging, and even costly for some nonprofits to have to meet this electronic filing requirement. But you all should all be aware of that. 990s are open to public inspection. So if you're familiar with GuideStar, I think it's called Candid now. You can go and look up a nonprofit organization and see their past 990 tax returns. You also need to be able to provide it if it is requested by someone. A lot of nonprofits put it on their website, since it's open to public inspection. And various entities might be interested in looking at your 990. It could be a donor, a funder, a partner, a member of the community, because it's going to give them a financial snapshot of the organization. One thing I also like to point out about the 990 is that you can use these to tell your organization's story, to tell your accomplishments for the past year. There's a section called Program Service Accomplishments, which is a schedule of this main forum. And so use that to let people know about all the good work that you've done throughout the year. A few other general statements. Your board.
Tracy,
Yeah.
Leslie, you can scroll up to the top. What she's referring to is the statement of program I'm sorry, next page, top of the next page.
Yeah.
My apologies. Right here.
Yes.
In
Yep.
terms of sharing, the statement of program service accomplishments.
Yeah, and so one other thing I'll say about this is that the section looks small, but you can write more, and it will just go in the Schedule O, which it mentions there at the top of this section. If you have, multiple program areas, or if you just have a lot of great work to be able to share, again, just use this as an opportunity to showcase the work that your organization has done. And like I said, there's different groups of people who might come in and look at this, whether it's a funder or a partner or a member of your community. Your board of directors should review this prior to filing. And there is a section, a governance section, where it actually asks you that question. So Leslie's going to keep scrolling through this, but a few other things that I'll mention is that on the main page, there's a summary of financial information throughout the year. Then what she's scrolling through is a checklist of required schedules that are supplements to this main form. There is a section on compliance. And there is a section on governance, which, as I mentioned, includes questions about your board, your governing documents, your committees, There is also a policy section which asks if you have certain policies in place, like a whistleblower, a document retention and destruction policy. It asks if you have a policy around compensation of leadership. And again, that Schedule O is a place where you can add any additional information about those areas. So there are lots of schedules that go along with this. It's different for every organization, so we're not going to go through all of them. Again, what you're seeing here is just the main 990 form. So I don't know if anyone has any questions, or Dr. Palmer, if there's anything else you think we should lift up
Nope, I think
on
this
this form.
is, yeah, I think this is where we need to be for the for the 990 form. And the next document that Tracy will review with us is the annual report. And so while there is an expectation that our nonprofit organizations will file the 990 with the Internal Revenue, there is also an expectation that we will compile, develop a annual report each year that really should align with that 990. Of which there will be additional information. Now, we have started to switch the language a little bit these days. They were annual reports forever. Now they're called impact reports. So it just depends on where your organization is with that, with how you name it.
Yeah, and just a couple of comments about an annual or an impact report. Again, it's another way to tell your story, to share your accomplishments from the previous year. A lot of nonprofits will put this on their website. It's also an opportunity to thank any funders or partners through your annual report. You may see financial and programmatic data or information. So that pie chart that we were looking at, you might see something similar in an annual report where you're showing where your revenue came from, and then sharing programmatic information as well. Um, and then just, think strategically about for your organization how you want to share this with key folks. Because again, it can hold a lot of really great information that tells the story and the work that your nonprofit has done over the course of the past year. And that's all I have on an annual report.
Okay. If you notice on the resource that we provided for you after the annual report is the audit and auditors report. That was that report was shown and used as Tracy was going through the different statements. And again, we do it that way so that you see how the statements interface with the audit. And so that's what we have there. And then Tracy, we have the generally accepted accounting principles. You want to kind of share the origin of that a little bit, just so this
Yeah.
is also in your workbook on page 104.
Yeah, so the generally accepted accounting principles, you might hear accounting folks refer to it as GAAP. It is just a common set of accounting rules and requirements that are issued by FASB, the Financial Accounting Standards Board, just to standardize procedures used in various accounting industries. So in the nonprofit industry. Um, it's really just, again, to provide clear, consistent, and comparable information on financials. Um, these accounting practices are required by nonprofits to ensure financial information is presented consistently and accurately. So you want to make sure that you're following any standards that might be applicable to your organization. I think again, we could go deeper into this, but I don't think, I know you all have a fundraising section to do as well. So I think we'll leave it there unless you have anything to add, Dr. Palmer, or anyone has questions.
I do not, and thank you, Tracy. As always, we appreciate you being here to offer your leadership in this topic and share with our participants. If we could go back to slide 18, and Tracy, this kind of wraps it all in a bow, I guess.
Mhm.
All that you just discussed with us. And so we just worked through most of this. We do highlight internal controls and the audit. And we've shared the idea around the guidelines and the policies. Of course, most nonprofits have identified what these are, particularly as it relates to their organization. And then oftentimes there are, if an organization is not able to do a full audit, sometimes the option might be a financial review, but by a credible accounting resource. And then again, the bylaws, and oftentimes there will be a committee that is put in place for the audit, which is typically led by both the finance or accounting staff person and the treasurer of the board, or the chair of the finance committee of the board. And so I don't know if you have any thoughts here, Tracy, that you want to share.
Yeah, I really think you touched on it well, Dr. Palmer. Just making sure that you're using the expertise of your finance committee or audit committee in either developing some of these things or selecting an audit is really important. So other than that, I don't have anything else to add.
All right, thank you. Thank you for that. The last
I have a
topic that we
question.
have, I'm sorry, go ahead.
Yeah, I have a question. You mentioned a financial review. Is there ever an occasion you would recommend a review versus a full-blown audit, especially for perhaps smaller nonprofits who don't have the staff and or capacity to do a full audit every year?
Tracy,
Yeah.
yeah.
Yeah, I think that can make sense for certain organizations, like you said, especially some smaller ones that don't have the resources, whether it's, staff capacity or funding to be able to pay for a full-blown audit because they are expensive. So I think that makes sense. At least you're getting an independent review on some level of the organization's finances. And I think that you can talk with accounting firms about doing a review versus a full-blown audit and get some guidelines from them about that process and how they can review your financials in order for you to potentially have to be able to share something with a funder, right? Because in the chat, we were just talking about a lot of times funders are the ones who are requiring an audit. And so I would encourage you to talk with a firm about your needs for that, and so that you all can come up with an appropriate level of review for your organization.
Okay. The next slide, please. So this is where we started. We started with taking a look at this image and studying it and just trying to understand for this particular organization what the diversification of revenue really looked like. And so we kind of broke that down. Keep in mind that some ways to diversify is through fundraising, is through fee for services, definitely grants. Sometimes our nonprofit organizations are able to secure contracts. For some organizations that have financial investment portfolios, we sometimes have investments that we can kind of pay attention to as to what degree dollars can come from those investments. And then, of course, endowments. And so, again, just be thinking about how to diversify our revenue in this way. We talked about not having more than a third coming from one source. That's another takeaway of this conversation, and work around managing our finances and how we're managing our finances. So this concludes the financial management portion of our work today. And does anybody have any questions for Tracy as we're bringing this to a close? And we can go back to gallery.
There were some questions in the
Okay.
chat. I was
Mhm.
just reviewing it. Hopefully, I'm not sure if Tracy can have a minute to
Okay.
answer. I think, well,
Yeah.
Miranda helped us answer one of them. Let me see. Hold on.
Yeah,
Do you
I
have,
was drafting a
okay, great.
response while
Okay.
Dr. Palmer was wrapping up, and I can certainly do that. But if we have a minute, we want to talk through it. Either way,
Uh-huh.
you let me know, Dr. Palmer.
You go right ahead. Go right
Okay.
ahead. Mhm.
So you can probably weigh on this too as well. So Heather was asking how often should you do a full audit if you have a CPA that's overseeing your books each year and a bookkeeper. I mean, I can speak for the center, so we do have an audit every year. And I do think that's best practice, but it may not be necessary depending on your organization. I would recommend, talking with your CPA about how often your organization needs an audit. But I do think typically, if you have one, it's annual. Um, so I don't know if that helps because it could be, specific to your organization there, Heather.
Yeah, I would get that guidance specifically from your accounting services. And if you don't necessarily, if you haven't secured that, it might just be worth the couple of $100 to just sit with them and tell them what your situation is, and let the professionals give you that feedback as to what might work for your organization. But sometimes your grants require it. So sometimes it's not an option. So if your grants require it, then that's a whole nother conversation that we would be having. But just in general, you may just want to consult with your finance professionals in that way. Is that all the questions in the chat? I know some of the questions were being responded to in
Yeah,
real
I think
time in
there's
the
one
chat.
more
One
about,
more.
yeah, what is the level of transparency for the reports across the organization? Um, I'm a fan of being transparent, internally, and externally, within your organization. So we try to share, monthly financial reports or information with our staff. Obviously, you want to be transparent with your board of directors. And then the external transparency comes from, sharing things like your 990, your audit on your website, your annual report. That sort of thing. So, Dr. Palmer, I don't know if you wanna
I
chime
agree.
in. Yeah.
I
Yeah.
agree. I kind of went, oh, let's be transparent.
Yeah.
Let's just leave it at that. I wouldn't try to finesse that. I would just show what you have going on, be able to explain your situation, and but definitely full disclosure is kind of where you are. You're only going to be able to be assisted and supported to the degree that your stakeholders know
Yeah.
what your situation is. So,
Absolutely.
okay.
I think we got
Was
the
that
rest
a
of
workout
them.
or what? Yes, it was, right? That was a
That's a
workout.
mental workout, yes.
Just keep in mind,
Wait a minute, Dr.
what we
Palmer. Didn't you say there was going to be a quiz at the end of this to go
oh
around and
yeah, I
ask?
forgot. Tracy, you have a test, right? For us.
Only
I'm
Lisa
just
has to take it.
just
The
joking, and
rest
I'm
of
just
you are off
joking.
Uh,
the hook.
Tracy, again, thank you so much for being with us. We
You
we
all.
we always learn so much more each and every time that you're with us, and so thank you your engagement and participation today.
Thanks
All
for
right,
having me.
so we're going to make a transition into fundraising. And so we're going to take another one of those 3-minute Zoom breaks. Is it a 3-minute or is it a 5-minute? We'll
I,
do a 5-minute
yeah.
Zoom break, and I will be back in 4 minutes. So know that I will be back and ready to go. So it is what, 11:17. What is that? 11:22. I'll be back at 11:21. So let you go and take a break. We'll get started back at 11:22. So one of the things that's important when we begin to think about fundraising, that's where we're shifting. We're shifting from financial management to fundraising. But those two functions in a nonprofit organization should work together. They should interface. And so the reason we're showing this proposed budget, an example of a proposed budget, this is a budget that was used for the 23-24 year for fiscal year for the center. If you look all the way over to the far right, the proposed budget, if we're thinking about fundraising for the next year, or even if we're thinking about projections for fundraising, if we were developing a strategic plan or we were looking at our 3-year plan, we would look to see what are those expenses going to be and what are the potential revenue opportunities for the organization. This topic is fundraising. And so when we look at this proposed budget, we can see, what our revenue, total revenue we would like to secure is the 2.2 million. And then if you scroll all the way down to where the total expenses are projected, right? This is proposed. Can you go scroll down or thank you. And so this is a break-even budget. And so we're looking at 2.2, little over 2.2 million for this budget for this particular fiscal year. You can see the expense line items, and then you can also, sorry, if you go back to the revenue, you can also see the areas in which the center for this particular year is proposing to earn its income. So you can see that total earned income is about 1 million. And then if you go all the way back up again to where the total individual, so we've got total foundation, total corporate, and total individual in terms of proposed budget and where those revenues will come from. It is important to have this understanding when you're trying to map out what you're going to do as it relates to your fundraising plan or your fundraising strategy for the year as well. Those two should interface. We've already talked about revenue streams being foundations. You can see that in this proposed budget. Corporate giving, which is in this proposed budget, and individual giving, and then there's the earned revenue. And so when we think about fundraising, we should also be thinking about meeting our financial obligations as it relates to what our proposed budget is. We should be thinking about fundraising on a rolling basis. We should always be engaged in some aspect of raising funds. That's important. We shouldn't just raise funds when we have a tight budget, or we shouldn't just begin to try to fundraise when we're seeing a crisis in a month. We should be, our fundraising apparatus should be worked along with the way in which we are studying our financial position and where our dollars are coming from and where our expenses are. So team, if we could go to slide 23 in the slide deck. And then group, if you could go in your workbook while the team is taking us there, if you could go in your workbooks to page 109. So in terms of thinking about fundraising, one of the ways to think about having a kind of roadmap for your fundraising activities is to think about it from the perspective of individual giving. So we emphasize individual giving and work through some prospecting as a way of better understanding these stages. And so identification, cultivation, solicitation, and stewardship. These are this is the framing that we use because we're trying to secure unrestricted funds and we want to be working towards that as um, as we engage in fundraising. We should be thinking about how do we get or how do we garner more individual giving, more dollars coming in from unrestricted dollars than not. Now, that's not to say that every nonprofit is framed that way in terms of where the dollars are coming from. That's not to say that's the case, but we do highly encourage that in this institute, that we be thinking about that in this way. We can go to the next slide. So we're going to do some hands-on work related to donor prospects. And we're going to walk you through an activity in terms of how do we generate a list of donor prospects? And then how do we cultivate that list? And then how do we solicit for donations from the prospects? And then how do we steward those gifts once we get them? And so this identification of donor prospects is where we're going next. We can go back to the gallery view, and then I want all of us to go to page 111 in your workbook. So we're going to do some hands-on work here. Some hands-on work. Again, what we're trying to encourage is establishing on an annual basis prospects that we are trying to approach in order for us to receive some unrestricted dollars through individual giving. And so we're going to do this. We're part of this, we're going to do in this gallery space. And then the other part of this, we're going to do in breakout rooms. And so to begin with, the first thing that we would like for you to do on page 111 is list 15 people you know. Don't think about it long and hard, just 15 people you know. And just put that person's name on that list. 15 people that you know. Where's my Jeopardy music? Don't. 15 people you know.
I'm here. Do 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 do. And then it plays in your brain for the rest of the time.
Awesome. Thank you. Thank you so much. All right. I'm going to go silent for about 60 seconds. Person you know. And this is an exercise you can do with your board. This is an exercise you can do with your staff. This is an exercise you can do with your family. This is an exercise you can do with your friends. You should be on number 7 or 8 at this point. You're just listing people you know. We should be at about number 12 at this point. Again, we're just listing 15 people that we know. And you should be at like 14 or 15 at this point. All right. Of those, when you look at the 15 individuals, you see the second column. The second column says believes in the cause. You could also put believes in the mission and vision of your nonprofit, the nonprofit you're representing today. In this column, you're going to put a check by the people the 15, from the 15, you're only checking the people that really believe and value what your mission and vision is of your nonprofit. You know that to be true, that they also value what it is that you believe, what it is that your nonprofit promotes, the work that you do, your mission, your vision. They value the work of the nonprofit that you represent today. You're just putting a check mark in that column by their name. Only the people that you say value the mission and the vision and the cause of your nonprofit. And if you could in the chat real quick, just tell me 15, I mean, how many out of 15 believe and value the cause? Just real quick in the chat. You have 15 people, how many out of the, or maybe you had 10, maybe you didn't have 15, but how many out of the people that you listed believe in the cause? Wonderful, 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 wonderful. All right, great. Third column. Of the people that believe in the cause, how many of them give donations? You know that they do, like they give a donation to their church, or they contribute to another nonprofit, or they have a cause that they fundraise for, or that they support. So you went from 15 people that you know. Out of the 15, how many believe in the mission and value the vision of your nonprofit that you represent today? And then how many of those individuals from column 2 actually make donations? They actually give money. Okay. All right. Last column. Of the people that give money or that make donations that you know of, if you were to ask them for a donation to support the nonprofit that you represent today, how much would you ask them for? If you were to, so out of the individuals that are noted in column 3 that give money away, we're asking that they become a prospect now for your nonprofit. As such, how much would you ask them to donate? Okay. Okay, everybody got their folks. And you got how much you would ask them. I want you to transfer those individuals' names over to page 112 in name of the prospect column. Now, you may not end up with 15. My hope is you did, but you may or may not end up with 15. So you're going to transfer column 4. You're going to transfer column 4 over to the first column on page 112. And that amount that you said that you would ask them, you're going to transfer that amount in column 4 on page 112. I know that's a lot of math and you haven't had lunch yet. Everybody with me? And again, this is an exercise you can do with your staff. This is an exercise you can do with your board. This is an exercise you can do with friends, with family. So you should have on page 112, you should have column 1 and you should have column 4. You should have that filled in. All right. The next thing we're going to do is we're going to move into breakout rooms. And in your breakout room, we want you to identify one person who's going to do all the tallying, right? And what you're going to do is you're going to gather from the folks in your breakout, that point person, you're going to gather the names and the amount from each of the people in your group. Everybody good? So you're going to go into your breakout rooms. Before you go in your breakout room, though, column 1 and column 4 should be filled in on page 112. And when you go into your breakout room, your point person, you might want to just take out a blank piece of paper and maybe record it on a blank piece of paper. That'll probably be a little easier, whoever's going to be the recorder in your breakout. Let me know if you have, give me a thumbs up if you have column 1 and column 4 completed in on your sheet now on page 112. I want to make sure we're all together before we go into breakouts. Okay. Wonderful. I think we're good. Rebecca, I think we're good. We can
All
go
right.
into breakout.
All right, we'll open up the rooms. And we'll see you back here. Is 8 minutes gonna be enough time?
Yes, I think so. Yeah,
Or
that
should it
should
be
be.
less?
Let's do 5, because
Okay.
I think they've already got it recorded, so they're just, yeah.
Okay. All right.
Thank you.
There we go. And assigning some folks here. B.
If you were the person who was doing the recording, if you could go ahead and add up the total dollar amount. If you were the person doing the recording for your group, go ahead and add up the total dollar amount and add up the total number of prospects. So if you were the person that did the recording for your group, go ahead and add up the total dollar amount and also add up the total number of prospects. And Rebecca, I think you are navigating the
Yes.
tally tool for us.
So I'm going to share my screen here. We got a little tally sheet. This is just a Google sheet to tally things up. So we had 6 groups. If you can, one by one, whoever's reporting back can unmute and go ahead and tell me what your prospects and the goal amount total you were planning to aiming for.
Group 1 was 51 with a total of 2325.
5. Okay.
Yeah, I believe I was in group 5. We
Okay.
had a total number of prospects, 62, dollars, 146,350.
Okay.
I was group 6. We had 33 prospects with our total being 137,850.
Okay.
I think I was group 3 and our total prospects was 60 and the total ask was 91,500.
Okay. 2 more groups reporting.
There's a group 7. We're group 7.
Okay, I'll put you in group 4. That's okay. Numbers don't matter.
Right. We had 32 prospects and 2490.
Okay. And our last group.
So our conversation shifted in our group. But our if our group can put totals in the chat box for the prospects and we can because I came up with 5 prospects and all of my contacts are actually working in nonprofits. So we were asking for a total of like $25 for each.
Yeah.
So for a total of 125. But if the rest of the group can chime in the chat with the prospects and the amount, we can probably get that.
No worries. I think for the purposes of this exercise, it's fine if
we're
we
good.
don't include it, but thank you, Cindy. I appreciate that.
Thank you.
We'll
And-
save y'all
and-
from having to add to the chat, but this gives you a sense
Right.
of how these numbers, prospects, and goal amounts can sort of compile together for one big number. But go ahead, Dr. Palmer, I'll pass it off to you.
I was going to say, and this is what happens in real life, right? It happens in real life. So
Yes.
if you gave your board members all this exercise and had them to bring this information back to a board meeting, and you had 7 board members there would be varied ways in which they left that meeting, right, to perform their task. This is why it's important for boards to have fundraising committees. And it's also important to have a point person that is helping to facilitate and coordinate. Because in this case, we would come back to Cindy's group, right, team? We would come back to her group and make sure we filled in those prospects and filled in that amount, because every dollar counts. Every dollar counts. And so in this instance, if we were ABC nonprofit and all of us represented one nonprofit, we'd have 238 prospects, and we would be looking to raise $380,515 for this exercise that took about 15 minutes.
And this is unrestricted.
This is
donations.
unrestricted.
Yes.
Now, we haven't made the ask yet, right?
Right.
But what we have been able to do is we've been able to identify people, get contacts, people who know these individuals who can get us some credible contact information. And then we also could potentially, if you look at page 112, we could also identify exactly who's going to make the ask to the person. Because I may have provided the name, but I may not necessarily be the person who actually goes out and solicits for the donation. And so our master prospect list, and you can modify this however you need to for your nonprofit, but on page 112, you have the name of all the prospects, you have the contact person, meaning the person who actually provided the name. You also would identify who's actually going to go and solicit. So there's about 50 of us in this space today. We would identify the one or two or three people that were going to go make the ask and how they would go about doing it. We would also equip them with how much they're going to ask for. Now, that other info column, that column is for us to provide any additional information that would be helpful for us to know about this prospect. For example, if prospect one was not tech savvy or not social media savvy or not digitally savvy, the who solicits and how they solicit the gift would be relative to that person, if that in fact was the characteristics of that prospect. So we've identified, this is identification. We've identified 238 prospects with the potential of raising about $400,000. Notice how I bumped that up, with the potential of raising about $400,000. And we generated this prospect list in about 15 minutes. And so again, this is an exercise that you can do with varied stakeholder groups with your nonprofit. Now that we've engaged in the identification, now we want to cultivate, right? We want to, again, identify who's going to make the ask. And we also now have, if you look at page in your workbook, look at page 115. We now have 238 prospects that we can put in our donor database. I mean, in 15 minutes. In 15 minutes, we have that. And so we can identify who they are, we can store their information, we can learn a little bit more about each one of them from our contact person that provided that name. And then we can decide how we're going to communicate with that prospect, how we're going to communicate with that prospect. That is the cultivation. So 230 prospects with the potential of raising about $400,000. Of course, we have to put some more meat on the bones with that. But that's the essence of what it is that we do. You know, people oftentimes will ask, they'll ask questions about fundraising as if there's a magic recipe. It's just what we did just now. It's identifying who to ask, deciding how we're going to make the ask, and asking. It's that practical. I think sometimes we think that there's this kind of apparatus that's going to miraculously make all of that happen. But it is us, it is those of us that are stakeholders of your nonprofit that make that happen. The other thing I want to point out on page 114 is there, once you've established your donors, there are ways in which we should interact with them. We should be transparent and share with them how much we're raising, what we're doing with the funds. The annual report or the impact report that Tracy talked about, that's a good place to put that kind of information. But we do have what is called the Donor Bill of Rights. We should be transparent. We should communicate with them. If they want to be acknowledged, we should acknowledge them. If they don't want to be acknowledged, we shouldn't acknowledge them. So these are all ways that we should interact with our donors. If they have questions, we should readily answer their questions. So Donor Bill of Rights. Another thing you want to note with cultivation is that some of your organizations use CRMs. And so there are different types of different resources that are available as far as different CRMs. There are, some of you might use Salesforce, some of you might use Boomerang, some of you might use Donor Perfect, Network for Good, Little Green Light. These are all different CRMs or platforms or software that you can use to store and file and work, WRK, work your prospects and work your current and existing donors, but also your prospects. So that's something that we want to point out there. Do any of you have a preferred donor database system that you use? If you would just put that in the chat, if there's something that I didn't name. I do think even if you use Excel, like you can use Microsoft Excel to start. Many of the database software or the platforms interface with Microsoft Excel. So that's important to think about. 238 prospects with the potential to raise $400,000 and of unrestricted dollars, and we generated that list in about 15 minutes. I think that's an important takeaway. Nothing beats the consistency and the frequency that you work on your donor database, that you work on your donor base. That's important. Accessibility, affordability with the platforms is all, those are factors to consider depending upon what your budget is for a software platform that you might want to use. Go to page 116. Again, oftentimes when we do work in this institute related to fundraising, there's a perception that there will be this magical recipe that we'll be able to give that will help you raise all the money that you want and all the money that you need. I wish we had something as miraculous as that. Nothing takes the place of identifying donors, whether they be current and you want to upgrade them, or whether they be new, which would be prospects. The same principles apply. You only get money if you ask for it. And that is with some consistency and frequency. That's important. That's an important takeaway. Identification, cultivation, solicitation, stages of fundraising. And we're focusing on the individual donor. Once you've identified donors, be it that they're new or they're existing, and you've decided for this year how you're going to approach them, that's the identification. Then we cultivate through the communication. Then we solicit, we make the ask, and then hopefully we raise that 380,000 and we will then steward that 380,000. So we have to manage those dollars or recognize donors or your nonprofit may have some specific ways, once a person gives, that your nonprofit may have some specific ways in which they communicate and reach out and stay connected to that donor. So that's important. The fundraising stages: identification, cultivation, solicitation, stewardship. That's the framing. Sometimes you'll hear those frames named a little something different, but it pretty much means the same. And we have to go out and make the ask. That's page 116. You only get money if we ask for it. Then once we've retrieved those dollars, then it is the stewardship. We have to steward those gifts. How might we communicate? How might we communicate? Team, we could go to slide 28. How might we communicate? So again, identification, cultivation, solicitation, stewardship. That's fundraising. And when we talk about fundraising, we're talking about the individual, getting the individual donation, getting and garnering the individual donation. How might we communicate? We might use some traditional methods, doing mailers, sending newsletters, sending them a thank you note, or we might use social media. We might announce who our donors are, or we might give an update on a regular basis of how we're doing as it relates to our fundraising and trying to bring in those donations. And so we have to identify, once we know who the prospect is, whether it's current or whether it's an existing donor and we want to upgrade them, how are we going to communicate with them to receive the next gift or the first gift? So that's individual donors, that's grantors, volunteers, board members, staff, the community at large. Communicating with the donors. Donor giving. In your workbook, go with me to page 119. 119. Pyramid of giving. We're going to fill in this worksheet. But go over to page 120 and 120. You got 3 pages, 120 through 122. That's what we want to focus on. Pages 120 through 122. Typically, if you participate in a fundraising workshop or training, the pyramid of giving is like the foundational, fundamental frame of thinking about how we give or how to manage the giving in your nonprofit. So it's important to kind of keep that in mind. And so what we want you to do here is we want you to utilize pages 120, 121, and 122. Page 120, 121, and 122. These are the pages that you're going to use. And you're going to fill in page 119. Okay? Pyramid of giving, types of giving programs, and types of fundraising. So we want you to work with this material. And then I'm going to come back after you do that, and we're going to walk through each part of the information that you see here. So page 120, 121, and 122. Okay, those are the pages that you're going to use. And in your breakout, you're going to fill in page 119. Okay. Rebecca is going to put us into our breakout rooms. It's 12 o'clock. We're going to come back at 12:10. It's 12 o'clock. We're going to come back at 12:10. Again, in your breakouts, you're going to use page 120, 121, and 122. And you're going to fill in our scavenger hunt activity related to the giving pyramid. The giving pyramid. Rebecca?
Right, open up the rooms. I'll put the instructions in the broadcast to the groups too.
Awesome, thank you.
Mhm.
There are um, there are estate planning legal professionals that really can probably shed some light on more of the particulars around plan given, like bequest and so on and so forth. I saw that pop up like popcorn, so I was just responding to that particular question. But I would definitely encourage you to connect with estate planners. And oftentimes those expertise can be found in the legal profession. They typically are abreast of, you know, what's trending and how that could be changing. So I don't know exactly what the specific questions are related to that. But that is definitely that would be a place I would start. Is that helpful? As far as the plan gives? I don't know who had that question, but at any rate. All right, so let's take out our test. Let's take out our quiz, the scavenger hunt activity, and we're going to utilize the chat for you to give me your response back. We wanted you to, if you had never been introduced to the pyramid of giving, that framework, we wanted to make sure that you did, and to kind of explain how that works in practice, as opposed to the theory of it all. All right, so the number of giving programs, Lisa, I don't know, sometimes it goes so quick. I have to I think I see the number we need to
3,
see though.
3. Yeah, a lot of threes.
Awesome, 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 awesome. So yes, there are 3 giving programs. And if you look at page 121, those are the 3 giving programs: annual giving, major giving, and estate giving. Those are typically identified as the 3 giving programs. And so that takes care of the second bullet: annual, major, and estate. Those are the 3. Give me reaction. Did you get both of those correct? Yes, 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 yes. All right. Hopefully our information was helpful in that way. All right, let's fill in the table. Match these 3 donor types with each giving program: habitual, impulse, and thoughtful. All right, so let's start with the first donor type, impulse. That would be the first time I give to your organization. The first time I give. Which giving program do you think matches that? Put that in the chat for us. Impulse. Remember we did the prospect list? Those would be new people. And in prospecting, we also study existing donors. All right, that is correct, annual. So impulse, a good match would be the annual program for them to give for the first time. What about habitual? Which do you think? Put that in the chat for us. All right. Yes. So individuals who have given, they have a habit of giving, right? So we see that they've given to our organization 2, 3, 4, 5 times or more. They've given to our organization before. So it would be appropriate for us to maybe approach them for a capital campaign gift, or to approach them for a kind of a special type of fundraising that we're doing for something unique that we may not need to fundraise for each year, but it might be something real unique in that way. And then the donor type thoughtful, I think it's a process of elimination. So that would be the plan gives or the estate giving, the estate giving. And so again, it is taking the principles and working the principles in the context of asking for a donation. That's fundraising. Now, there are different ways that we go about asking for the donation. If you look on page 122, for annual giving, We maintain a donor base, and we want to make sure we got all of our prospective donors in there. We do personal solicitation of gifts. We still do direct mail, but we also do social media ways of connecting with people to give, and we do special events, annual giving. So those are some like tools that we use for that annual gift. And then the major is corporations giving or approaching foundations, and definitely capital campaigns. We could do an entire workshop on nothing but major giving or just annual giving or just estate giving. But this particular session in our institute is to introduce you to and or remind you of the way in which we frame fundraising, the way in which we frame it. We frame it around identification, cultivation, solicitation, and stewardship of donations of the individual gift. And so it's important to kind of keep that in mind. What does the pyramid symbolize? Share that in the chat for us. What does the pyramid symbolize? Let's see what some of your thoughts are. What does it symbolize? Pyramid of giving. If you look at get back over to the pyramid. If you look at page 120, the pyramid of giving, what does it symbolize? What does it symbolize?
Number
I don't
of
see the
donors,
popcorn.
program, giving matrix of donor base, number of donors / program,
Mm-hmm.
relationships or
Relationships.
foundation.
Mm-hmm. Mm-hmm. So here's the key takeaway here. The key takeaway is solidify your annual giving program, right? Develop it, implement it, and grow in that particular program with some consistency and some frequency. The theory is that if you have a solid annual giving program, then moving into a major giving program becomes a little bit easier because you have the foundation. The annual giving program is the foundation. Sometimes what we want to do is we want to jump to the capital campaign before we have even worked with or established a donor base to approach. And so we start off by trying to engage the impulse donor, then move them to the habitual donor, then move them to thoughtful. Folks might be a little taken back if the first time they hear from you is for the capital campaign, because typically the capital campaign is an ask for a fairly significant amount of dollars. And so the theoretical concept there is that we build the pyramid, is we build the annual giving foundation. Then we can build upon that to major giving to estate giving. That's the symbolism there. And some of you may be familiar with Maslow's hierarchy of needs. It's that kind of that also kind of aligns with it. If we can take care of the basics, the annual giving is the annual budget that Tracy talked about. It's meeting those expenses, bringing in that revenue to meet the budget. Then once we have a track record of doing that, we're probably more or less ready for a major giving program. Because those foundations and the corporations, they're going to be asking about your financial position more than likely if they're going to invest in your major giving program. So that's important to think about. Team, if we could go to slide 30. And folks, I just have two more things to talk to you about, and I'm going to turn it over to the team to get us ready for graduation. So a couple of things to think about. So we talked about fundraising, just outright fundraising, establishing donors, making the ask, prospecting, understanding the identification cultivation, solicitation, and stewardship. That's the fundraising framework. And then we use a tool to guide us called the giving pyramid. And then we work the concept of the pyramid as we are working through our framework for fundraising. Fund development is a little different than fundraising. So what we just talked about and what we just kind of worked with our hands a little bit is the fundraising piece. Now we're talking about additional funds outside of fundraising. Grant writing would be a part of that. Earned revenue, generating earned revenue. Remember the pie chart. That's another fund development strategy. We talked about endowments, and some nonprofits have real estate and have investment portfolios. And so those are some other ways to bring funds into our nonprofit organizations. So that's important to keep in mind. And then some of our nonprofits engage in what we call social entrepreneurship. So there might be a business opportunity or a business venture opportunity that aligns with our mission and vision that we want to pursue. So we might engage in more or less an entrepreneurial type of opportunity. And when we do that, it might be partnering. Oftentimes I see this happen when a nonprofit is partnering with another entity. They both bring their resources together, and then they're able to create a business apparatus where they're promoting or selling some good or service or something like that. So that's important to keep in mind. Ben and Jerry's kind of does this a little bit, with their, they promote, different causes, and then they're able to give as a result of that. So you might find yourself with an opportunity like that. Also in healthcare, particularly around like rehab facilities, elderly facilities, senior services. We see some of that happening in those spaces as well. So fund development, and your list might be more than this. Like I said, endowments and investment portfolios and contracts. These are all fund development strategies, which are different than fundraising. Fundraising is a little different.
Make sure you get paid.
Last slide for me for the day, we can go to the next one, is who helps us do this fund development stuff? It might be paid staff, it might be volunteers, it might be the board, or it might be consultants. So oftentimes we do need help in order to make this happen. And so important to kind of keep that in mind. We can go back to gallery now. What a day, right? Woohoo. You'll be back next week, right? No, just financial management and fundraising. That was our topic for today. If you didn't work out this morning before you joined the call, you just had one. So you can mark this as a part of your workout for today. Thank you all again. It's so good to have you here with us. We appreciate you choosing the Nonprofit Management Institute as your professional development resource. I'm going to turn it over to the team to close us out of our 5th session. Lisa, we got one more to go. It goes so quick.
I know. Wow.
Thanks, Dr. Palmer, and thanks to Tracy for joining us for the financial management section. This is always, we try to pack in 2 topics in one session, so it is a lot to cover. Thanks for bearing with us and for following along. Lots of time, good quality time spent with each other in breakouts as well as in the gallery. But we hope that you're taking a lot with you, a lot of ideas percolating and things that you're planning to change or do differently. We've put the session evaluation link in the chat. Our next session next week is our final one. We'll cover human resources, and we'll have a special graduation towards the end that you're going to make sure that you don't miss, because it's a really special part of closure with this cohort and everyone feeling a sense of accomplishment. So we're looking forward to that. Let's go to the next slide here. For graduation prep, you all will be receiving a invitation from a platform called Montage, and it will invite you with some prompts to submit a very short graduation message that we will compile into our graduation video. It's not required that you participate. We like to get a handful of folks that participate though, answer one of the questions, one of the prompts. I promise it's not too hard. You just want to make sure that you're in a place that's well lit without lots of background noise, and that your video comes through clearly so that we can include it in the final video. And then we'll show that as part of graduation next week. We also will send you a link in the wraparound for some graduation themed backgrounds. Oh, sorry, if you'll go back, thanks. That's optional as well. You can download one of those, save it to your Zoom, and then we'll have lots of fun backgrounds for folks as a part of graduation. It makes for really fun. We take a class photo, which we'll do through Zoom, which I struggle with because I got to use my snapping tool, and it takes us a little while, but it's nice to have and good to send to you along with your graduation certificate that'll come to you in the mail. Really important if your mailing address has changed. So the mailing address you gave us where we sent your workbook, if it has changed, I need you to let me know so that we send your certificate and your graduation photo to the right address. So hopefully all of you have stayed in the same place, but if not, please let me know. I'll put my email in the chat for anyone that needs to make an update or anything. Any questions about any of that? Okay. All right, let's go to the final slide. I think we've got a couple more slides. Obviously we have lots of member benefits that go along with financial management and fundraising. You can see here, we provide I think it's a front to back one pager, well, two pager in essence, that goes through all the topic areas. And as a member, you can kind of sift through there and see if there are any member benefits that relate to the topic that would be helpful to you for more information, for getting some more resources or assistance with any of these topic areas. So we've got quite a few here for each of the topic areas. And this slide deck will be sent to you in today's wraparound email, so you can feel free to plug through here and click on any of these links, that sort of thing. And then last of all, we know some of you are planning to attend our conference coming up next month. We're less than a month away, which is insanity, but it'll be here before we know it. And we'd love to see you there. We are potentially going to have a session just for our MPMI grads to kind of gather together and have like a networking on steroids session, which should be really fun. But only if we have enough people that come and show up, because we need to have a certain number of people in order to make that impactful and meaningful for everybody. So feel free to go
Mention our
ahead and
early
get
bird
registered.
special too. Our
Go
early
ahead.
bird just mention our early bird
Oh
date.
yeah, thank you, Lisa.
Mhm.
Yeah, our early bird discount comes to a close this week. So the last day to get that early bird rate is the 22nd. And for our members and our sustainers, that's really where you want to get the most bang for your buck. Lots of folks come to full conference, and that's really the best way to kind of get the most out of it. So we want to make sure you get the access to those early bird rates. Thanks, Mary. We're looking forward to it. Yeah. And we'll be sure to be on the lookout for any updates about conference as they come. You all should be getting those as well. All right. Well, with that, we'll go ahead and we'll sign off, and we'll see you next week for our graduation and our last topic, human resources. Look for that montage video link prompt to submit your graduation video greeting, and we'll look forward to getting your videos. Thanks so much. And feel
we'll
free
be
to
on
tune
for a
in if
few.
you have questions. Yeah.
Mhm.